Amazing. All right, let's get this next party started. Are we doing good, guys? Yes? Yeah? Yes? All right. It's almost lunchtime. I get that. But we're going to have a really exciting conversation. And again, it's about DeFi in 2025. And I would like you to really warmly welcome our speakers to the stage as I invite them up one by one. And first up, we have Julien Bouteloup, CEO of Stake Capital. Please give him a warm round of applause. Come on, guys. Thank you. Lex Sokolin, Managing Partner of Generative Ventures. Welcome to Proof of Talk, Day 2. Aurelien Giraudon, CEO, France, Swissborg. Welcome. And DeFi 2025 will be moderated by Kavan. Welcome. He's the investor at CoinFund. Enjoy.
Hey everybody, thanks for joining us. We're really excited to talk with you about DeFi today. There's been a lot of talk about stablecoins and regulation, so we thought we'd keep this panel a little bit more focused on DeFi. And I thought a fun way to kick it off would be to do a round of introductions and talk about the DeFi protocols that everybody's using the most personally. So I'm Kavan, I'm an investor at CoinFund, and the protocol that I use the most is EtherFi.
Hey, thank you. So I'm Aurelien, I'm the French CEO for Swissborg. I've been working in DeFi since 22 and being in crypto since 2017 personally. I would say the thing that I'm most interested in DeFi is really the lending primitive, which is like, I've seen a lot of innovation these days, and there is still innovation coming, so I'm quite bullish on that one.
And so have you been like trying the lending markets yourself, or using Aave or Morpho?
Yeah, I'm using them a lot, like personally, yeah.
Awesome.
Hi everybody, my name's Lex. I'm a co-founder of Generative Ventures, and previously I was the chief economist at Consensus. My DeFi protocols today will be super boring because I think that's what's good now, you know? Emotionally, that's where I am. So I'm going with Spark because I like that yield.
So my name is Julien Bouteloup and founder of Stake Capital. Also a couple of different DeFi projects like Stake DAO, asset management, governance power, Rekt News, and also been the first guy to join Curve Finance. I helped Michael build the auto market maker. I would say that my base protocol today, probably Morpho. I think they completely reshaped the DeFi landscape with the vault management. So, yeah.
I've been really impressed with Morpho as well. I think those guys are doing a fantastic job of straddling, getting retail interests, but also working with institutions, which is exactly what we need to see in crypto. Moving on, I'd love to hear like what's one exciting innovation in DeFi that made you like really excited over the past year? At this time in 2024, we were talking a lot about restaking. I think that narrative's like totally gone. Like, what are the narratives that you guys have been following? Maybe you start with Julien this time.
Yeah, I think the restaking landscape, symbiotic or eigenlayer, really changed the game from yield optimizations to trust optimization. I would say one of the biggest, most useful technology that will make DeFi completely mainstream is probably the account abstraction and a smart wallet, because it's the ability to use crypto or DeFi in a complete centralized user experience way. So it's pretty great. And the second one is the vault. The ability to have yield and auto-balancing strategies without managing those different strategies. I think for traditional financial players, it's something that they really know on a daily basis. So it's something that they can plug themselves into and leverage.
So I'll ask the audience, how many of you here have a crypto wallet? I'd love to shame somebody, but I can't see anything because the lights are so bright. So whoever you are that doesn't have a crypto wallet, you know, hiss. How many of you use DeFi on a sort of like monthly-ish basis? How many of you use it for like really aggressive farming strategies to make lots of money? And
Make just money.
Yeah, to make. And everyone else is just using it to lose money, which makes sense. That's roughly your odds on meme coins. Okay, so I'm going to say lots of things I don't believe, so I'll start now. My position on DeFi sort of asset management has shifted recently more to I want the safest, most conservative on-chain crypto product ever. I am no longer interested in farming anything. I think leverage loops are cocaine for meth addicts. I think that we have enormous looped smart contract risk, and we create all of these sort of house of cards situations to make ourselves feel like that's not the case. And so more recently, I think the best product in DeFi is keep it on Ethereum, bridge nowhere and do nothing, only get paid in units of account that you want to hold, meaning forget all the airdrop tokens, they're going to go to zero, you're only going to sell them, and then you're going to forget you're going to sell them, and then you're going to forget how to access the contract that's going to allow you to claim them so that you can sell them. And so the banner I would wave is we're in a moment where you can have extremely conservative on-chain fixed income that is super high quality, where you can ignore all of these risks that I mentioned and still get a product that's better than treasuries, and I think that's where my focus is.
So I'm like both, pretty much. I think I have both view. I think like one of the biggest innovation is really like I said, the lending primitive, and what has been done on Morpho. And I agree with Lex on the part that now you have like true fixed income and nice one, like stable with collaterals, like super well collateralized, and so you can find those things on DeFi, But I'm also on the degen side, and I don't want to lose that also that part of the culture that is DeFi. Because for me, there is really two parts in DeFi. There is the institutional DeFi, which is really like you can get safe yield, without too much smart contract risk. And there is the lab by itself. And the lab for me is something that is super important. And I think we should keep it that way, and we should keep like innovating with new stuff. But in the same time, we should continue to have capital flowing to Ethereum, and going into like those big Morpho vaults, those big Aave protocol and like Aave v4 and all the things that are coming. So I would say I'm pretty much like in the mix between those two. But yeah, I mean, like for me, we should continue the spirit of DeFi, which is like a degen one and a culture one, I would say too.
Those are some great insights, you guys. I'm curious, do you think that DeFi is still a playground for crypto-native traders only, or are you seeing indications that it's broadening out, serving real financial use cases, and maybe reaching a broader audience? Maybe Lex, you can start this one.
Sure. So I'm going to preface again with everything I say I don't believe. So don't trust my answer, because I do think perpetuals and exchanges and all this stuff is extremely useful. I just think we're now in a moment where the conservative fixed income asset class is something that crypto can make, and that's never been the case before. And so whether you're using Aave or Spark or Athena or some but not all Morpho vaults, you can get there. Definitely not all, not most. If you're forget Pendle, it's fine. Everything's great. So I think what's interesting for me is that at Consensus, we used to sell tokenization to banks in 2019. And every single investment bank you can think of was running a proof of concept about tokenizing this bond or putting this cash settlement thing, or here's some shitty private credit our normal customers don't buy, so why don't we sell it to crypto investors who don't know how to assess investment opportunities, all of this. Probably hundreds of different projects with investment banks. And then it all went away because we had DeFi Summer. And now it's all back, but it's new. It's RWA, not STO. It's stablecoin and so on. And what's happened is that the banks were there before, but now you've got the fintechs. So 2019 through 2022, there were no fintechs. If you're Robinhood, I do not care about selling crypto. It's just not a profitable business line. And in 2025, you have Stripe begging at the altar of Satoshi Nakamoto by paying $1 billion for Bridge, right? Or you've got Coinbase and Circle having a blockbuster stablecoin IPO that is about 4 to 5 times what most traditional Wall Street people would say is fair value, because there's so much market interest. So we're now in a place where you've got stablecoin orchestration getting plugged into fintech, and fintech is Web 2 distribution of financial products. They don't care what financial products they distribute, they just package them up and they sell them to you, you click the button, everybody's happy, right? You click the button more and more, they make more money, you're addicted to Robinhood or whatever it is. So now these multi-million, 100 million, 500 million total user probably footprints are in the process of integrating stablecoins, both B2C, PayPal, pick your poison, and B2B. So that's Bridge, Ramp, and Brex, and every single B2B fintech company you can think of is doing it as well. And so what is downstream from stablecoins, right? Once you have the money in motion, you have money at rest. The money has to do something. And usually what it does is it earns interest. So DeFi orchestration inevitably and immediately is consequent to stablecoin orchestration. And we're like, I think 60% through-ish of the stablecoin orchestration theme. So I completely forgot what your question was. But my point about DeFi and what I'm seeing that's going to explode is you're going to have all this stablecoin orchestration plug into the gigantic engines that we have of Aave and the rest. And we're at a moment where it's like 25 billion, what a big protocol. That's not a big protocol. When it's going to be 500 billion, that's going to be a big protocol. Schwab's money market fund is 1.5 trillion. Compare that to DAI. So anyway, whatever that's worth.
Well, I think you said it all, It's a very nice recap. I mean, we went from institutions to fintech, and he's completely right. Fintech disrupt financial institutions. They took massive, big market shares. And now they are starting to use crypto like Robinhood, Stripe, Bridge, Coinbase, you name it, all those companies, that they are starting to use this technology because they can attract or they can tap into a new market that has mainstream adoptions. So I would say and now the tool that we built, like I mentioned before, the Vault mechanism, it's also really easy for those guys to understand the concept and to plug into and then generate or tap in and provide yield to those users. So we are moving into a decentralized finance, into a traditional finance in a way that traditional players will need to adopt those different technology, and vice versa. We're moving from DeFi to more compliance, more KYC tool. So I think there's a mix between those two different technology that will merge, and then DeFi, DGens will become more KYC, AML compliant boys, and then the
compliance punks.
Yeah, exactly. And then the fintech guys will become a little bit more degen. But this is happening for sure.
Yeah, coming back to that, I mean, at Swissborg, this is exactly what we've been rooting, like exactly since the start, like that. We are a crypto native platform, and the thing is like we are a fintech by essence. We are Web 2, right? But we are connected to DeFi. That's the thing. And this is what I call the DeFi mullet, pretty much. It's like a fintech of front of like blockchain infrastructure, pretty much. And this is where I think we are going. And now at that stage, you can see that there is like DeFi application. In terms of UX, they are good or not good. And I don't think we will solve the problem, with a lot of stuff, because like at the end of the day, it's financial primitive. So it's cool that it's accessible for everyone. Everyone can tap into. And I think this is the power of DeFi. If you have a little interest and a wallet, you can go in there. But at the end of the day, those complex structure, when you have a fintech on top of it that can power, those really like big opportunities. I mean, we can say it with Coinbase, what they've done with the Lombard loans, pretty much. Like the Bitcoin-backed loans is really like one example that something that was built on chain and that was powered by on-chain infrastructure at the end, but benefit the end user, which is the retail user through a fintech app. So I think, yeah, we had this paradigm where we were like in DeFi summer, which was everything about DeFi, and exactly what you said, Lex, about like, I would say institution trying to raise money for the junk bonds, for the junk stuff. Web3 was just like a way to raise capital at the end. And now it shifted from this to, okay, now like the blockchain infrastructure is really something meaningful and we might use it, And why? It's because it's cost effective at the end, And it serves a lot of benefits. I mean, instant finality and there is like instant settlement. Like for example, if you speak about this in TradFi, like a lot of people will look at you and they say, yeah, I mean, settlement is T+2 and it's not, no, look at blockchain, it's like instant, There is block finality and stuff like this. So they are really shifting from just raising capital to using this infrastructure. And I think this is like where the future usage will be. So I'm quite bullish on the DeFi mullet, which is fintech in the front and DeFi in the back.
Yeah, I think those are, again, some great points you guys are making. The adoption of fintechs in crypto over the last year has been so exciting for me. Robinhood had 20% of the revenue last year powered by crypto trading, but even more exciting is that they power 24/7 settlement with stablecoins and weekend settlement, and that's using crypto innovation to offer a better version of their traditional product. So I think that's like a really great indicator of adoption.
Yeah, if I could just add a thing, because like I think a lot of crypto people will be like, fintech sucks, like TradFi, boomer, blah, blah. And that's a misunderstanding because you're confusing the store with the factory. So you have a factory of traditionally manufactured financial products and they're sold in the store, which is the mobile app. And now we as an industry have access to put our stuff in the same store. So like, don't get mad at Amazon or Walmart carrying products from different manufacturers. It just happens. Rather, celebrate the fact that our stuff is now in the store that everybody can access.
That's a great segue into the next question. So DeFi's openness is one of its strengths, but complexity, especially around self-custody, limits adoption. How can we make DeFi more accessible to people? I know we hit on some of these things, but I'd like to hear some more concrete examples from you guys.
I think Julien started well with the smart accounts, but you may continue. So
yeah, we all mentioned it, like smart accounts, secure enclave. I mean, all the stuff of account abstractions, the ability to use a DeFi app in the same way that you will be using Revolut or any Web2 like X. So I believe like this year in 2025, the DeFi space will be completely different. You will basically normally have difficulties to understand if it's a crypto app or Web2 app. And I think if we get to that moment, it means that DeFi actually solved the UX and UI problem. And so this is the first one. Also building technology that is exactly behaving like you find in traditional finance. So the vault. I think the vault is something that completely changed the landscape of DeFi, because now you have institutions that understand the concept, understand how to use those tools, products. So they just need an API, they just need an SDK, they can implement that in their native mobile app. So it's extremely simple. And I think the third pillar, so first it's asset management. The first one is UX and UI. And this third one is privacy, confidentiality, anonymity, or whatsoever. And I think this will be solved by ZK. So either from FHE, like with Zama here in France, CoFHE, TEE, whatever. So all those different tools are now bringing sufficient amount of like traditional features in something that was not actually usable by those players. And I agree when people say TradFi sucks or whatever. I don't think actually TradFi sucks for daily usage. I mean, you use your bank account, you will not use a DeFi bank account right now. Maybe the new Gnosis one. But I think TradFi is extremely good at doing things and extremely bad at doing other things. So for example, cost efficiency or whatever, transfer, borderless, and you can name them. And DeFi is extremely good at doing other things. I don't think TradFi care about finality, to be honest. You can ask them, oh, you want to wait 4 or 5 days more for settlement, but you make 10x more money, they will go for the 10x more money. They don't fucking care about settlements. As long as they get more money and you have a credit risk line that they can leverage that and make even more money. I think at the end it's all about efficiency, but more importantly, the money aspect. So yeah, 3 pillars: UX, UI, asset management, and the third, confidentiality, or know your customer, AML, KYC. Yeah. Which is now solved in 2025. Yeah.
I love how specific your answers are. I'm going to try to dilute the soup a little bit with bullshit. So I like that you're enjoying it. Like the crowd is just like not allowed to laugh at all.
We have like two that laughing.
That's the person who's making money.
Yeah,
one
the gold.
person on Pump Fun. Yeah.
Yeah, the G1 and the monuments. Yeah.
0x crime fight. Okay. So I'm going to say the best thing that's happening for DeFi is Apple losing the court case about them taking 30% of all fees. That is the best DeFi feature that's happened in the last year.
Yeah, that's true. So if we come back to the question, which was exactly what?
Yeah, we want to understand, like, how can we make DeFi more user-friendly without...
Yes, it's about UX. Yes, it's the UX thing. So I guess, like Julien described it, like, which is the smart account, I guess, like, which is, for me, a big part. It's a big part of making, you know, DeFi, I would say, more usable and more user-friendly, I would say. But for me, this doesn't solve, like, I would say, not the true problem, but the fact that if you want to educate people at one point in time, UX is good, you know, but there is still some people that doesn't want to be educated. That's the thing. And like, I mean, and this is the thing with people that open a bank account and go to a bank, you know, like they will say, you can say to them, like, go on DeFi and do, you know you can do that stuff and that thing. And they say, yeah, but I have a bank account. I can do exactly the same, you know. So this is the thing. There is tech coming, I would say. But I would say fintech right now is filling the gap, I would say. Fintech was always about, like, you know, trying to, it was the UX layer of TradFi, I would say. You know, with really like the app thing and the Revolut that we're trying to simplify every process that you have. So I think like the next big thing that we will see in DeFi is really like having some app where pretty much like you will not know that you are on DeFi. And you will do like some complex stuff and you will have a non-custodial wallet directly inside your pocket. And you will do stuff that you will do in TradFi exactly the same, but you will absolutely not know it's about crypto and it's about blockchain. And I think this is the beauty of it. And for me, like the UX challenge goes through, we will need to have some app, some good product, you know, that some people will use. And right now there is a battle between like those Web2 fintech, Revolut and stuff, and there is a battle between, you know, the Ledger Live and stuff that are on the non-custodial side. We will see who win, but at the end of the day, if some people are caring about privacy, sovereignty, and, you know, the fact that they want to have their own funds, they will go the non-custodial way, and the other ones will go on the fintech way.
Absolutely. I think that vaults are a really key piece of enabling a better UX. Like you were mentioning, today with the innovations that have happened over the last year, you can deposit in a vault and be farming from Uniswap, Aave, Curve all at the same time, which I don't know if people in the audience have tried using those protocols yourselves, but I always lose my money. So if you haven't tried DeFi, I think that's a really great entry point. And I think all of this comes back to, like, there has to be a UX that's simple, right, for people to adopt. Most of the people who care about decentralization are in crypto today. Like, that might be an unpopular comment as a
Who cares about decentralization?
Who? I mean, I think that a lot of the people...
You remove the money aspect, I don't think you have many people in this room.
I totally agree. We're on the same page here, right? Like, I'm saying the next wave is not going to care about decentralization.
That's true, no?
I care a little bit. A little bit.
I mean, I care,
Yeah, I
but
care, yeah.
I'm just saying, like.
And I think we should be honest about that, right? Like, people come into crypto for the opportunity to make money, right? Put your assets to work, and we have to make it as easy
People are
as possible.
wrong. Just because they do that doesn't mean it's right or that it's good. I'm not pushing back at you, but I am pushing back on the last like 2.5 years of profound poisonous bullshit that our ecosystem has shoved into millions of people. I mean, you know, like I started my entrepreneurial journey in 2010 building out a robo-advisor, and a robo-advisor is an ancient fintech concept that says you buy an asset allocation, it auto-rebalances for you, it's like a vault, and you don't lose money because it's a bunch of index funds. And this was, you know, only made by people before, and then we made it so you can have a Web 2 version of it. You know, in Europe, these are neobanks and so on. There are some robo-advisors that did okay-ish, but they're not really hot and sexy and cool. The cool companies were the trading companies. So at the same time, you had a bunch of mobile brokers, like neo-brokers coming out, like Robinhood and Free Trade and Webull and so on. And largely, those things are designed around the TikTok algorithm of, hey, do you want to trade today? You want to trade today? Today, do you want to trade? Do you want to trade today? This is up, this is up, this is down, this is down. Like, if you have the Coinbase app, it's like, how many notifications a day do you need that Ethereum is up or down? Like, are you making decisions? And that is utter garbage and poison, and it makes people's lives better. And unfortunately, the outcome is that we all love it. Like, we love the TikTok of finance.
It's a casino.
And so Robinhood absolutely slaughtered in terms of size by a 10x anybody who is selling you safe and good asset allocation. And Coinbase, or let's say Binance, has ramped up the Robinhood sins by 10x more, and it is 10x larger as a result. And so it's like super painful to me where crypto's here to be a decentralized financial system that is supposed to be beyond capture and beyond sort of the FTX crime and beyond like manipulation of currencies and self-sovereign and finally a way out of the hellscape that the banks have created, getting us all addicted to penny stock trading. And instead what we're doing is shoving 500,000 tokens down people's throats so that 99.5% of them can lose all their money. You know, so I do think decentralization is important, and I do think there is a distinction of people who are here, and I'm not pointing fingers. If anyone, I should point it at myself because the word ventures is on my t-shirt. You know, but there are people who are here for the money, and then there are people who are here for principles, to build something different. And I hope that all of you are on the better side of that trade.
I think when you get a new industry, speculation is always part of it, right? Like we saw that with the internet boom, and people speculating on crypto drove stablecoin, it literally created stablecoins, which now powers instant settlement, which makes merchants' lives around the world significantly better. Like they actually care about this. So it's kind of a push and pull, right? Like you need the speculation because it drives interest, that leads to innovation, that actually makes the industry useful for people.
You're right, I take it all back.
So moving to regulation a little bit, now that the environment's more favorable, are you guys seeing more protocols focused on distributing value to the users? And also, what are the actual mechanisms that you guys are the most excited about for value distribution?
I don't think that changed a lot. Like, that's the thing, you know? We've seen, like, I mean, revenue sharing, we've seen, like, tokens burning and stuff like this. But I don't see, like, a lot of, I would say, value redistribution. Like, if you look at the probably like the biggest value redistribution that has been happening in the space, it was like the hyperliquid airdrop, pretty much like on the past year, you know. So if we are saying that an airdrop is like value redistribution and we don't have like a strong mechanism, I mean, we are not creating anything like different from TradFi. I mean, buybacks exist in TradFi, right? So this is not, there is nothing new in there. And the thing is like, I'm not even sure that it needs to be like value redistribution at the token level by itself, because if you look like from the scope of the token representing the product and you like the product by itself, I mean, it's like equity at the end, you know, it's like buying a stock. So it's exactly the same thing. So in a way of trying those new things of redistributing, I don't think we've seen like new mechanisms that are not a Ponzi, to be honest. And probably we will see them, but for now I would say it's still the good old buybacks and burning and fee sharing that has been done in GMX like for I don't know 2-3 years, but that's it. I don't think we've seen like any evolution on this. I don't know your take, Julien, but
I don't agree. I mean, we've been working pretty hard to build some pretty good stuff. So, for example, Curve, the incentive mechanism, the ability to have plug and play with protocols to compete for the governance in order to control the incentive and the distribution of the intrinsic value, which is basically made from auto market making. So this is like people want to swap assets and they have the ability to control where this type of revenue can flow across different protocols. I think this is something pretty astonishing if you compare to traditional finance. Yeah, I think we're moving more into a cash flow revenue system where you actually have real intrinsic value. So not like farming airdrops, as you mentioned, like farming, but actually like really capturing the value from lending, from trading, auto market makers. And now we're moving into exotic product or derivatives like options, perpetuals. So those things are actually value that you can capture a lot of value from those things. They're not like fake token inflated value. And the restaking, I think, is still being built, the trust layer, in order to capture value, still being built. And then the second one is the vault mechanism, as we mentioned, but which basically on the vault mechanism is like the meta governance system. So I think we failed on the DAOs, like decentralized autonomous organizations, but we have succeeded in a governance mechanism for a battleground across all different DeFi Lego that want to be plugged across all different protocols. I think this is pretty astonishing, and it's capturing quite a tremendous amount of value so far. So I would say, and it's becoming more and more robust, because when you have billions of monetary value at stake, and this continue without being hacked, then it shows that it's a really strong system. And if you think about it, in the human history, the only thing technology that hasn't been hacked so far is probably Bitcoin. Never. Anything has been hacked across. So it's pretty, what we built across DeFi, I think we can all be proud of ourselves. And over the past few years, we've been building a lot of different things, even in a bear market. And now, of course, the market is going up, so we all focus on the price. But yeah, so far, so good, to be honest. Yeah.
What's the prompt is token accrual?
Are there new value accrual mechanisms that you're excited about, especially now that regulation has become more favorable?
Okay. And I know we're coming up on time.
I didn't answer this question. I just answered what you said, actually.
Yeah, so I know we're coming up on time. I think the word token is very, is sort of elusive, and it means different things to different people, so it's easy to ambiguate, like, it's hard to disambiguate what tokens are. I would at least draw a line between designing systems and designing project economics. Really different, right? Because we have like the systems design of a Bitcoin or the Ethereum protocol is going to be at a very different level and will require different mechanisms like restaking or alignment between projects, or how do you bring the L2s back into the layer 1 fold, and should you have sequencers, and should they be based, right? So like that's systems design, is how do you make the economy work at a high level? And then there is, and I think for that, I would say the clusterfuck of layer 2s is helping us figure out good mechanism design on how to align. And then at the project level, it's exactly the regulatory point, which is we no longer have to hide behind tokens that do nothing, because we're able to use the revenues of projects and the value created in order to, depending on where you are, distribute that revenue, buy back tokens, reinvest in the business, fund things through grants, use foundations. So all that stuff I think has matured, and I'm excited about it, but that's for projects. So you're thinking about companies. And building great companies is super important, but I think building great systems or economies that are composed of lots of individual companies is even more important. And that's exactly what I think DeFi is able to do that is completely unique to it. So beyond building this brand or that brand, building a financial internet that is much bigger than everybody on their own is really the key thing.
Awesome, you guys. Thank you so much, everyone, for joining us, and I hope you enjoy the rest of Proof Talk.
Thank you so much, guys. I love that last point about building a financial intranet that's bigger than everyone. That was a really great takeaway.